Don't fuck this one up. It really is so easy to capitalize on an industry that is going to 4x in the next 12 to 18 months.
GM, good morning. Welcome to Milk Road Radio, where we teach you the ABCs of crypto and make it easy as 1, 2, 3. I'm Jay Hamilton, and today we're joined by Kyle Reidhead. Now, today, the U.S. Fed shared May inflation numbers and announced their decision on interest rates, causing the markets to go up and then down and back up. And the volatility continues, and we're going to make sure you understand what the heck is going on, and most importantly, what it means for your investments in the short term and the long term. Kai, thanks so much for joining us today. Welcome back to the show.
Thank you. Excited to be here.
All right, let's jump in. The Federal Reserve had their meeting today where a bunch of old white dudes gather around and decide if your money should be worth a little bit more or a lot less. Kyle, what happened?
Yeah, so before the Fed met, actually, we had inflation numbers that came out this morning, U.S. inflation numbers, which is quite important for markets, at least right now when people really care about macro. They really care about interest rates, and obviously inflation numbers is what guides the rate numbers. So we had some good news finally in inflation. So the expectations for CPI in the US was 3.4%, and it actually came in at 3.3%. So that was the bullish news of the morning and why markets went up. More importantly, if we look at core inflation or core CPI in the US, it came in at 3.4%, which was at 3.6 the month before and 3.8 the month before that. Interestingly, there's a lot of noise around inflation at the moment. And I feel like I've been a broken record on this podcast for like a year, just saying it's going down. It is going down. I don't know why there's so much concern. And if you look at the chart of core inflation, it literally has just gone down and down and down for the last year and a half almost. I feel like people are living in the past and living in this 2022 terrible bear market era when we had super high inflation. It's like, guys, it's just going down. I don't know why everyone's so confused about where markets are heading. It's pretty clear to me that it just continues to go down. If you look at core, don't get caught up in CPI is my clear takeaway there. Anyway, the markets love this and everything pumped in the morning. So markets were super green. Everything was up I don't know, I think Solana was up 8, 9%. ETH and Bitcoin were up around 4%. Interestingly, the day before, markets were down and actually really bad. The timeline was super bearish, and it's because everyone expected inflation to actually be higher. And so funny, timeline's super bearish the day before, inflation comes out, timeline is all of a sudden super bullish because inflation came in lower than expectations. The weird thing about this is every single month, the analysts that basically come up with their predictions of where inflation is going to be, they get it wrong almost every single month. So why do we keep basing our projections on this? It really blows my mind. Anyway, today was an interesting day because we had the inflation numbers, which are super important. And at the same time, on the same day, we had the FOMC numbers. What is that? That's basically just the Fed coming out saying, are they going to raise or lower or keep interest rates the same? Last week, we had the Bank of Europe, which lowered rates. We had the Bank of Canada, which lowered rates. So that was pretty exciting. And people were kind of speculating what's going to happen here with the US. And unfortunately, the news, well, I don't know, fortunately, unfortunately, it's staying the same as we had last month and the month before that. I think it's 5.25% or whatever rates are at right now in the US. They're not budging. And interestingly, actually, it was a bit of a hawkish meeting. And by hawkish, I mean, I guess you could call it bearish. Basically, it was no rate cuts, but also when you look at the expectations of those in the FOMC meeting, the expectations are now just one rate cut this year at 25 basis points, whereas last month it was maybe 3 cuts at 75 basis points. So a little bit more bearish than I think what we thought. And so the market didn't love that. And so that was kind of the jerk backwards in markets after we had the inflation news. So a little bit of wildness. But overall, I mean, to see inflation come down is good. I didn't expect them to lower rates in this meeting. So I'm not too concerned. I think the rate cuts will still come. I think we just need to be patient. I also, just one more point before we move on here. The job of the Fed is, I mean, they're trying to control inflation. And then eventually they need to lower rates. They have to lower rates because they need to help with unemployment. They need to help stimulate the economy, et cetera. So they need to lower rates at some point. But they can't do it right now because they're afraid that inflation might pick up again. And so their job is to kind of thread the needle here. And so what they're doing is basically they're seeing inflation coming down. They could lower rates right now, but what they want to do is spook the market. And so they're telling you they're not going to lower rates for a long time and we're going to stay higher for longer. I still think we see probably 3 cuts this year, 2 or 3. And I think it's, at least, I think it's at least 50 basis points, not 25 like they're saying. This is them like kind of playing poker with the market. They've got to put up a bit of a front. They've got to lie a little bit. And then eventually, like they were saying, they're going to be higher for longer. They're never going to lower rates at all this year. And yet they're still going to do it. So they have to just sort of like play with our perspective a little bit, which is just kind of interesting.
Just like when you're trying to, get on that first date or something like that, you got to tease it a little bit. You can't go right
Exactly.
to the point, you got to hold back. Okay, Kai. So when this news came out, a little bit bullish, a little bit bearish, kind of heading in both directions. How did you respond and what does it make you think about your investments in the short and in the long term?
I mean, interesting. The market moved a ton on the inflation news. I think crypto added like 60 billion or 70 billion into its market cap. I can't remember, but it pumped pretty
67
strongly.
billion in 1 hour.
67 in 1 hour. Yeah, right. So it's interesting. I don't do much on these because I'm looking more into the future and playing my portfolio and my investment strategy more long term. And so to me, it's pretty clear inflation goes down over time. Maybe on a month to month basis, it might go up, it might go down. But like if you look over a year, if you look at where the trend is going, inflation is going down. If you look at where the trend is going for rates, it's going down. The amount of central banks around the world that are lowering rates is increasing significantly, really, really fast, especially over this last week with Europe and Canada. And so where's the trend going with rates? It's going down. And so what does that mean? Well, it means that risk assets are probably going to go up over time. Again, what's the trend? We are not in the 2022 trend where things are getting worse and worse and worse. We're in the opposite trend now. We're back into a bull cycle where things are trending upwards in terms of risk assets. And so for me, I'm not trying to capitalize on a Fed meeting like in the news that comes out in that little move that we had of 4% or 5% in ETH. I'm not trying to trade that. Most people shouldn't try to trade that. And so for me, absolutely nothing changed in terms of my portfolio because I'm already invested for where I think the market's going to be 12, 18 months from now. And so a little meeting today, a little inflation news today doesn't impact me at all, actually. What I do sometimes in moments like this was yesterday leading up to this news, people tend to get spooked. And as I said, markets kind of went down a lot yesterday and people were quite bearish. And so I bought some ETH, I bought some SOL, I bought some Maker. And as we talked about in yesterday's episode, and that's about it, right? I'm not going to trade around much. I'm not getting scared. I actually wish we had worse news and prices went down even lower. That would be completely fine. So I don't do much when markets move like this.
So let's bring it back to an episode that we had last week. Because last week we did an episode where we went through about 12 charts and looked at a bunch of key indicators to build out the case for why we felt that the markets were the macro situation, the economic situation, and the crypto on-chain numbers were showing that we were in a very good position to likely see a pump. Now, we don't know exactly when that comes. Timing is tough, right? So we don't know if that's going to could be tomorrow. It could be months from now. And I think that's a tough position to be in because that kind of brings up the question of like, okay, well, what do you do now then? Sure, the setup is there that it's going to come, but what's your advice for navigating and also it's summer, which is always can be a bit of a choppy period. What's your advice for navigating these next few weeks, these next few months through what could be an up and down summer?
Yeah, I know a lot of listeners, they listen to that episode probably and they got super bullish, which is great, as you should be. But then they get impatient and they go, well, wait a minute. You said last week that it was an inflection point and it's all going to happen. And it's like, well, rewatch the episode. We didn't say it was going to happen today, as you just said. It's going to happen at some point. And actually, for me, again, you said macroeconomics and then crypto, sort of like bullishness or bearishness of crypto. And it's not like I actually asked someone today was getting worried, or yesterday in our pro channel was getting worried about the markets. And they were like, well, looks like Sol's going down a lot. Should I sell? Like, what should I do? Blah, blah, blah. And I just asked him, was like, has Solana's tech gotten worse? Are less people going to adopt crypto now for some reason? Like, has anything changed? And the answer is no. And so as long as nothing has changed there, if anything, things have gotten more bullish. We've had a bunch of new projects launch, a bunch of good things have happened in the space, new wallets, new like UX improvements, et cetera. And so for me, the longer it takes for markets to have its move based off sort of macro, and yet crypto continues to get more bullish in terms of fundamentals, all that for me just says we're going to have a bigger and bigger move. Think of it like when you shake a bottle of Coke, The more you shake it, the more it's going to explode once you open that lid. That's kind of what's happening right now. The more bullish that the adoption of crypto and the tech around crypto just improves over time here, it's like you're shaking up that bottle of Coke even more. And then all of a sudden, rates get lowered, or we start to print some money, and that's taking off the cap, maybe throwing a Mentos in it, and boom, the thing just absolutely skyrockets. That's kind of a good explanation of how you can put it. So again, when I think of my portfolio, I don't think of where things are at right now. I think, where is it going to be in 12 months, in 18 months? And as I said a bunch of times, I think the market cap of crypto goes to maybe 10 trillion over the next 12 to 18 months. That's a 4x from here. And so all I do is spend my time not looking at what the price is today. I'm looking at, okay, if the market is going to be 10 trillion in 12 to 18 months, what's going to make up that market cap? Is Bitcoin going to be 50% of that, or 55% like it is now? Is it going to be ETH? Is DeFi going to be the sector that outperforms? Is it gaming? Is it AI? That's the stuff I'm trying to think of right now, so that I can position myself to capitalize on that growth period, right? I'm not buying and selling right now. That's a waste of everyone's time. You're going to, if you're a professional, you maybe get it right when you day trade, like 50 to 55% of the time. Now, hopefully you have your risk and things like that kind of figured out so that you can be profitable. But imagine that you get it right half the time if you're even lucky, and if you're really, really good doing this every day. And so I'm not doing this every day. I run a business, multiple businesses, and that's not where I want to spend my time, my attention. What I want to think about is, where is this industry going? And then how can I allocate right now to capitalize on that? And so what I'm looking at is, which sectors do I think are going to outperform? Which protocols are building and doing the best right now? And I'm trying to just like study and build conviction rather than worry about these price movements that are happening on a daily basis.
Any tools or practices that you have to manage the movement, though, because the prices do move on a daily basis.
Yeah.
And unless you live under a rock or throw your phone in the lake, then you're still going to look at it. So
It's a good point.
it's right in front of your face, and that is going to be stressful, right?
I gave a lesson this morning actually to one of our pro members who I could tell was stressed out over the markets. And I was like, okay, maybe I don't know, maybe you have too much allocated to this. Like, I'm not quite sure. But one of the lessons that I taught was, if you are stressed, if you are allowing the markets to stress you out, you're going to make bad decisions, right? The time that you are more likely to make bad decisions in life in general is when you are stressed out. And so your goal as an investor is to find ways to make yourself less stressed, especially during market volatility, right? Now, how do you do that? Well, that's different for everyone. In this example, this person had alerts on his phone where he got an alert saying that Solana was down 10% in however long. And then he got an alert saying it was up 8% the next day in however long. And I was like, dude, turn those off. That's only adding to your stress. That's the last thing you want to be doing, right? The best way to sort of like alleviate stress is, one, have a plan, have a strategy, right? Because then these little movements aren't going to impact you. They're not going to worry you. And then the second thing is like build conviction, right? One of the questions that I kept asking was like, has something changed in your conviction? Has something changed in your investment? Is the technology getting worse from yesterday? Hell no, right? And so if you're building conviction in the assets you're holding and not just gambling in them, like, look, if my whole portfolio was meme coins, hell yeah, I'd be stressed because I have zero conviction in any of them. There's no reason why I'm holding them other than it's just a random bet, right? It's like if you go and throw $100,000 on something in Vegas today, you're going to be hella stressed on, if the right number pops up in your gamble, right? And so if you invest in things that you truly believe in and you understand them and you build conviction in them, then these movements don't really bother you. And so a lot of investing is about controlling your emotions. Part of that is having a strategy, building conviction. And then it's like, I don't know, trying to understand your emotions. In a lot of our reports and a lot of my like analysis and things, I say to write things down. Write how you felt when prices moved a ton and when prices moved down a lot. What were your like initial reactions? What were your instinctions that you wanted to do? You probably wanted to sell something, even though it's a bad time to sell when things dump 10%. And it's also a bad time to buy when things go up 10%, but that's what we do, right? And so you need to try to learn and understand those emotions, the fear, the greed, because it's always going to exist. It doesn't matter how good of an investor, if you're an institutional investor, if you're a professional or not, those emotions are always there. The good investors, what separates good and bad investors is, can you handle those emotions? Can you manage those emotions? If you just let those emotions force you to take action and sell things and buy things at irrational moments, you're going to be a terrible investor, right? Even if you have the best investments, even if you know all the right assets to buy, you'll still fuck it up. But if you can learn to manage your emotions in those moments, That's the key to a good investor right there. And if you can consistently do that over time, as we've talked about before, throughout multiple cycles. So I feel like you almost need a therapist to help you manage your emotions throughout cycles and throughout volatility, but it's really what it is.
The thing that stands out to me here is a famous Warren Buffett quote that I remember where he talks about it's not the IQ that makes the difference in a good investor or a bad investor. It's their ability to manage their temperament and the ups and the downs, which is rather comforting to those of us who don't have 160 IQ. It's like, okay, great, we could still do well, but also puts into perspective the need to, hey, here's one of the greatest investors in the world saying it's not IQ that matters, it's your temperament and your ability to manage your emotions. So everybody turn off your alerts on your phone unless you're a day trader. You don't need those alerts on anymore. Kai, any final thoughts to share with us today before we let you go?
Yeah, don't fuck this one up. Like it really is so easy to capitalize on an industry that is going to 4x in the next 12 to 18 months. Seriously, guys, just don't fuck that up. It's not that hard. You can literally close your eyes right now, put capital into any token in the top 100 in CoinGecko, and you'll probably do well over the next 12 to 18 months. That's the stage that we're going into in the bull market. I'm not saying you should do that, but you can. That's how easy it is in a bull market. I mean, same within tech right now. You can buy Apple, you can buy Google, whatever. They're all going up, right? And they're going to continue to do that as rates go down and as liquidity goes up. It's that simple. When you start to trade and, start to get cute on these meetings and different news and price performance, et cetera, like that's when you fuck this thing up and you miss it. And that to me makes no sense. When crypto moves, it moves really, really fast and it moves quickly. And it's like 1 day or 2 days and you have all the gains and then nothing happens for a while. If you miss those moments, if you're not in them because you're trying to get too cute, that's literally how you fuck this up. And so just don't fuck this up. That's my advice.
Wise words. I'm going to mic drop that one. Kai, thanks so much for joining us today. In other news today, in case you missed it, a report from Bitwise predicts a 20 trillion boost to global GDP by 2030 through the combined power of crypto and AI. Now, this Bitwise report highlights the synergy between Bitcoin miners and the AI industry due to the computational power they can provide. Also, they highlight blockchain's technologies, transparency, and security, which can be leveraged to authenticate AI-generated content. In other news, the UK and 24 European countries can now use PayPal to purchase crypto through Moonpay, which will make it even easier for UK and EU residents to onboard and buy more crypto. And finally, Gnosis and Chainlink have made a partnership where Gnosis will be integrating Chainlink's CCIP. Now, this integration is a win-win for both projects. For Gnosis, it means access to Chainlink's powerful off-chain computation capabilities, enabling them to build more complex and feature-rich applications. And of course, they also benefit from reduced gas fees. And then for Chainlink, this partnership further solidifies CCIP's position as a leading interoperability solution. That's a wrap on today's show, folks. Thanks so much for listening, and we'll see you again tomorrow.
Thank you for listening to Milk Road Radio, the easiest path to get smarter about crypto. If you like this episode, share it and hit subscribe or follow so you don't miss out on the next one. There's also a link in the description to our free 5-minute daily newsletter where we simplify crypto for you while making you laugh. And if you're willing to step up your crypto investing game, then we'll leave a link to Milk Road Pro as well, your #1 resource to help you invest successfully in crypto. One final note, this podcast is for educational purposes only. Nothing we say is financial advice. Crypto is risky, so you should never invest more than you're willing to lose. Thank you, friends, and we'll see you in the next one.